All right, what's up, everyone? So we will get started with the economic calendar, and let's see what we got for the upcoming week. I waited until now to mark up my charts, so I haven't really looked at anything yet. This is going to be kind of a long session, so if you guys have to go, just post your question in the chat box, and I'll get to it towards the end of the live session. So let's see. All right, so if you don't already know, I use Forex Factory for my news, and at the beginning of every week, I just check it on Sundays or Saturdays, depending on when I have some free time, and just go through it and see what we got for the upcoming week. So today we got Euronews tonight. I don't typically trade Sunday and Mondays again. I usually wait for Mondays to finish trading and then look for my trades Tuesday, Wednesday, or Thursday. So you'll start to see whenever I call signals and stuff, it'll be typically Tuesday throughout the rest of the week. So we do have interest rate and FOMC Wednesday at 11. So I will probably not be taking any trades during Wednesday unless I see a setup form between Monday or Tuesday and I've already locked in a good portion of profit. Then I would hold it throughout FOMC, but I would have my stop loss and profit if that was the case. And we do have NFP on Friday, so I won't be trading Friday just due to NFP. So primarily my trading will be kept to short-term day trading, as well as intraday scalps, anything like that. Between Monday, Tuesday, Wednesday, between Monday, Tuesday, and Thursday. More than likely won't be trading Wednesday at all, and definitely won't be trading Friday for NFP. So that's that for the news calendar. Let's go ahead and take a look at the dollar index. So we are coming up for the end of the month. So tomorrow's the 30th, and then Tuesday starts a new month. So that means we're going to have a new monthly candle. And a lot of people, whenever they're looking at their charts, they don't ever go out to a monthly or weekly time frame. And they really should, especially when a new month is going to start, because you have to get some clarity on what's going on with the charts and price action and what you should be looking for going into that new month. So let's go ahead and mark some things out. So right here, we've got our high. And let's just go ahead and mark this. All right. Okay. Market structure high. All right. Now, for the past since February, we've just been declining, right? And once this candle here and this candle traded through below this area right here, let me actually mark it out. All right, so this gray box, once the market traded below this, that was a market structure break on a monthly basis. So I like to see the candle close below it, not necessarily wick below it like this did here, but you could still consider this a break in market structure. But I like to see this move here unfold with down candles closing below the low to confirm the break in structure. So on a monthly basis, dollar index is still bearish. So these two up candles right here are an ICT bearish order block. All right, so let's grab our little triple thing. All right. Wow, this is not letting me. Okay. All right, so we got market structure high, market structure low. All right. We pushed back up, and then we just retested this old support level, which was now found resistance. Okay, and then we traded lower. High, low, lower high, right? Then we got a lower low. So if the market on a monthly basis is still bearish, we should expect these up candles here. I'm going to delete these. These up candles should hold as resistance when the market trades up into it. So think about what's going on. We're at the end of a month, so we're at the end of April, so this candle can close anywhere. It can close here, a little bit lower, whatever it wants to do. Once May opens up, we could get the market trade higher, right? So we could see it trade higher at the beginning of the month. So say that's this week, for example. And then that forms a wick, and then we get a break in structure, all right? And then we could see potential downside for dollar index for the rest of the month. So anytime I see this in price action on a monthly basis, nearing a level of resistance or support, you know that an opportunity for a potential big trade is coming. So if we break above this, for example, if we come and we break above this, then it's clear that we're going to want to go higher, right? Then we look for a retest of this, and then we go long and then target market structure high. But at the current price action, we are still looking for bearish price action within dollar index on a monthly basis. So keep in mind, this week, next week, we could get bullish price action in dollar index. I'm just speaking from a monthly basis. Since we have a new monthly candle unfolding, I want to map out the potential things that we could see unfold. So we are actually going to mark out the whole candles. So from the low to the high, so this low here to this high, and that whole area should act as resistance for dollar index. Now, how we're not just going to short it in here, and you could if you're a swing trader and then put your stop loss above here, but I like to wait for confirmation on a lower time frame, get a break in structure, and a retest before I'm going to go short dollar index or anything like that. So you need, I personally have to wait for confirmation, but this area here from this low at 91.01 up to 95.15, so that's 400 pips. I mean, I know that's a lot, a giant area, but you have to keep this stuff in mind because, if we get a strong push up the month of May, then we're going to see higher prices in dollar index, and we need to be prepared for that on foreign currency and what we're looking for in the charts. So now that we've got this level marked out and we know that we could, if we push above it, then we're going to expect higher prices. If we hold this as resistance, then obviously we're expecting our primary bias is bearish. So we're expecting lower prices on dollar index. All right. So the whole reason that I marked out this market structure high here was just to explain that we are in a bearish market on a monthly time frame. And we know that by looking at the price action that we've seen. So we've got a high. All right. All right. So we got the market structure high here, and then we made a low, which was lower than this low. So we've got a lower low. Then we pushed back up, formed a high, found some resistance, and traded lower. this high is a lower high, and then right here we've got another lower low. All right, so all we're expecting to happen is this, a lower high, to form within this gray box. So that lower high will form, and then we're expecting lower prices. And then we'll have another lower low. That's if the market stays bearish. Now, if we trade above this, then we'd have a break in structure on a monthly time frame to the upside, and then we would have a low, a high, a lower, a higher low, higher high, and so on. So then we would go from there. But again, we're looking for bearish price action, and this is why, because we have that bearish structure on the higher time frame dollar index chart. So I'm going to delete this stuff, and then we're going to drop down into the lower time frames now. All right. So I'm going to keep the gray box on there because I'm going to use that as a reference point as potential resistance, that whole time that we're within that box. All right, so on a weekly time frame, obviously we've been having bullish price action, right? We've been forming higher lows, and then we've made a higher high. We've got a break in structure here. Now, again, that's why I was saying that, until we break above this gray box, that'll confirm to me that we should go long dollar, which I don't trade dollar index, but that would mean I'd go short foreign currencies if I'm going to be looking for a higher dollar index. And so far, we have been seeing dollar index, and once we get onto a lower time frame, we'll actually see what's been going on in more detail. But in terms of the levels that we're looking for within the monthly ICT bearish order block that could hold as resistance, we have a weekly ICT bearish order block low right here. So we'll mark that out in red. The low comes in at 92.50. All right, so we got that. So that could be the level that it trades up into and starts trading lower. So again, keep that higher time frame bias in mind. We could trade up there. That could form the monthly wick. That's a higher time frame resistance level. We get that breakdown, get some sort of break in structure, get a retest, and then lower prices. Okay. So that could be the level that they use as resistance to take it lower. Now, since we're on a weekly now, we can refine price action a little bit lower. And now, instead of, actually, we'll just adjust the gray box. So instead of having this as our invalidation level, so anytime you're trading, you want to have an invalidation level. And if you don't know what an invalidation level is, it's a level where you're wrong. Okay, so this is where you should switch your bias, basically. So if we're looking for lower prices on dollar index, now my previous invalidation level was above this high. But since this is a weekly ICT bearish order block, if they come above this high, it's more than likely that they're going to want to take it above here and more than likely clear up all these highs that are in here. So if that's the case, I need to have an invalidation level, and I was just able to adjust my invalidation level about 100 pips or so, between 95.20 down to about 94.20. And we were able to do that because we have a weekly ICT bearish order block within the ICT monthly bearish order block. Okay, so as you're dropping down to a lower time frame, you can refine your price action lower. So let's see what other things that we have line up for this level. If we draw our fib, okay, now the reason that we're going to be using this swing for our fib is simply because this is the swing that we got the break in structure, right? Right here, once we broke below the low, that was a break in market structure indicating that the sellers are in place, right? So any trade up to 61.8, 70.5, or 79, basically would be logical resistance levels, right? So now what I'm going to do is I'm going to take my gray box and I'm actually going to adjust it to these levels specifically, because I don't really need the level that the whole range that we had on the monthly, because it's pointless, because we know that that whole level should act as resistance, but we're looking for that key level, right? What level is it that they're going to turn around at? What's the price level of that? Is it 91.96? Is it 92.48? Is it 92.99? You know, so that's what we're looking for. Now, look at this. Whenever we pull our fib on here from the high to the low on the swing that broke market structure, directly lining up with the ICT weekly bearish order block right here, within an ICT bearish monthly order block, we have the 70.5, which is considered the optimal entry level that ICT uses for its fibs, optimal entry level. So 70.5 overlays directly with the weekly ICT bearish order block low, okay? So whenever you get stuff like that, 92.48, 92.50 could be a really influential level for dollar index. All right, so let's put that on our charts. Where's, all right, 92.50. All right, so we got 92.50 there. That could be the potential level that they want to reverse from, right? And if you're wondering why that's the start of the ICT bearish order block, whenever I have candles that are next to each other that are up candles, right? So if I'm looking for a bearish order block, I'm looking for sequential up candles. If it's just one up candle, then fine, I'll use the one up candle. Like this, for example, it's one up candle, trades lower, breaks it. So now it's confirmed an ICT bearish order block. Any trade into it would be a sell. Here, trades opens here, trades up within the ICT bearish order block, and then it trades lower. Okay, so that's just one candle. Here, we've got three candles. Trades below it, trades back up within it, sells off. Okay, so same thing here. We've got three up candles, and I'm using the whole thing as my weekly ICT bearish order block. And it's within the monthly block, right? And then we've refined that to the fib levels. We've got confluence around 92.50, and the gray box marked out is the 61.8 through the 79% fib levels. And you could see last week alone traded right up to that 61.8 retracement level, and then so far traded off of it. So you could see how it acts as resistance. And again, it could want to trade higher into this, or it could just want to trade back up into 62 where it did. And then this week we just start shooting lower. We just have to see, you know, what we get. Let me actually put a little. All right, so if we trade above that, that's my invalidation level. Then I'll be looking for longs. All right, so I'm bearish until this high breaks, which is 94.22. If we break above, let me put that line on there. So if we break above 94.22, I will not be looking for shorts on the dollar index. I will only be looking for longs. As of right now, I'm only looking for shorts. All right, so we have a bias. That means we're looking for shorts within the dollar index. So what should we be looking for in foreign currency? Longs, right? So that means GBP USD, we should be looking to buy. Euro USD, we should be looking to buy. USD CAD, we should be looking to sell. USD JPY, we should be looking to sell. And we'll go over all that stuff in just a bit. So is everything clear to you guys so far? I just want to take a little break and make sure that everybody's getting the things I'm talking about so far and I'm not moving too quickly. So just type yes in the chat box if everybody's following along. Okay. Okay, perfect. Thanks, guys. Okay. So now we've marked out our levels on a weekly basis in terms of the dollar index, right? So our resistance levels, because we are looking for shorts. So we're looking for levels that price could likely trade up into. All right, so let's move down to the dollar index. To the daily, sorry. All right, so just look as you break down time frames. So we just went from a weekly to a daily, and we're marking out our levels starting with a higher time frame. You can see how it doesn't require you to look for support and resistance based off, a cluster of candles or a bunch of wicks lining up or anything like that. You can actually see it based off structure in the market, right? So here on a daily time frame, we traded below, and this level right here was, let's actually go back and we'll mark these out as we go so nobody gets confused. All right, so we know that's our invalidation level. And then we know this is the ICT bearish. I do OB just for short, and then I'm gonna put that this is the low, right? That way we know, this is the minimum retracement level. Okay, it could come within these three candles anywheres, but this is the minimum level that it will likely come into, okay? Because that's the low of the lowest body candle within the ICT bearish order block. So let's drop down to a daily again. Oh, shit. I gotta make these visible on the daily time frame. Okay, there we go. All right, so now, if you look on a daily, we had the break in structure here, then we traded right back up into that same weekly bearish order block, right? On a daily time frame, we traded up into it, and you could see this is 92.50. We formed the high at 92.64, so 14 pips above, and then we sold off. And then you could see, this sell-off was huge, right? And that's the reaction that you get off of higher time frame levels. So we're expecting the same thing, right? That retracement that happened on the daily time frame, this became a daily ICT bearish order block, right? So I hope this is kind of clearing some things up for you guys, but we've had a monthly ICT bearish order block, then we refined it down to a weekly ICT bearish order block. Now within the monthly, within the weekly, we've got a daily. These three up candles are a daily ICT bearish order block. All right, so now we're gonna mark that out. How do we wanna do this? Okay. So we're just gonna use the same gray box and we're gonna adjust it to here now. To the low of those three candles. All right, and then we know that this right here is, let's make sure that we put weekly so we know that this is the weekly. Weekly bearish order block low, okay? All right, cool. So now we've refined our resistance even lower with the daily time frame. So we've got the low coming in at 91.78 and the high coming in at 92.64. 91.78, 92. All right, cool. So now you can see we traded right up into that, and then so far we've started to see some sell-off. Now, to confirm that we are in fact bearish and that the sellers are in the market, yes, you could have sold as it traded up into here. Now, that obviously takes time and confidence to trust, just selling it way up here based off of, whether that be just the ICT order block you know, or if you're basing that off of, you know, 79% retracement fib level. So 91.73 could have been your entry with your stop loss above here for a swing trade or a short-term trade, whatever you were looking for. You could have done that, but for me, I like to wait for that confirmation. And so just an example of that is Friday, we've had, you know, if someone looks at candlestick patterns, I mean, again, I don't really look at candlestick patterns, but this is you know, a doji or whatever they call it, or a star. Regardless of what it is, you could tell that it's made a big long wick and it's found resistance here. Okay, so that doesn't necessarily mean that they're just going to want to take it lower now, you know, and shoot it down all the way back to 88. But if we get a break in structure, then that could be, you know, a potential opportunity. So our invalidation level is still, where did I, make sure we have that visible. All right, invalidation level, perfect. Okay, so if we come back above this high here, I would be more inclined to wait until I have further confirmation before just entering right away, right? Because this could be, the market could break above here, find some support here, and then continue trading higher if we are bullish. I don't see us just, you know, trading higher all the way back up to, you know, 100, but that is a potential scenario if we keep breaking highs. So in terms of what I'm looking for, though, to confirm that we are bearish, this candle here would be what I'd like to see break. And the reason I'd like to see this candle break is because it's a daily ICT bullish order block. So this would be a logical support level. So the market could do something like this. We could trade down into here, and then we could get a push up. And then we see our bearish price action here. And then we start to break lower here, right? That could be one scenario. Or this could be a scenario. We could trade down, find support, come run this high here above the weekly bearish order block. And instead of using it as resistance, we could break through it, and then we could use it as support and then trade higher. Right, so that's the two potential scenarios that we could see unfold for dollar index. Now, so that's two, and then this is the scenario that would confirm to me that this is what I'd be waiting for. Like, so if you're really patient and you want to wait for that confirmation, I just like to have more confidence whenever I'm taking the trade. And if we get this would be a break in structure on a daily, because we'd be below this low, which should be acting as support. So we could break below it, turn and act as resistance, and then look for lower prices from there. So we could see, you know, the market just open up and then we just start trading lower. And, you know, right out the gate from the beginning of the month of May, we could just have a bearish month right away. And that could happen, but we just have to keep everything in mind for our ideas. All right, so this is our bullish order block. We'll keep that. I'll use a line instead to make this nice and clean. And then we'll change this to blue. And the high comes in at 91.08. All right, and then this is a daily order block. So I'm I know it seems super simple, and like in terms of the things that I look for in the charts, and it's just a bunch of bullish and bearish order blocks, which is my support and resistance, market structure breaks, and fibs, and that's really it. And that's honestly all you really need to make money in trading. You only need a few things that you've practiced and studied over time to actually make this work. You don't need every single thing in the book to, be a profitable trader. Okay, so we've got the daily ICT bullish order block. Let's drop down to a 4-hour, see what we got. So again, just to show you how you can see as we break down time frames, we're on a 4-hour now. We broke it on a 4-hour, traded back into it, the daily ICT bullish order block, and traded higher immediately. All right, so it's so key to mark out your levels on a higher time frame, because if you would have marked out this high, once this candle closed above it, this candle opened here, then it traded lower. That wick right there was just formed at an ICT daily bullish order block. So if you're looking at a 4-hour time frame or a 60-minute, you would never see this stuff if you're looking on a 15-minute time frame. It's just going to look like the market's crashing versus trading into a logical support area. So you see it trade into support, and then it immediately pushes higher. So that's why it's so important to keep your higher time frame bias in mind and have your levels marked up on your charts. All right, so 4-hour, we know that we're still looking for this. Okay, we haven't really had a clear break in structure yet. We are forming lower lows and lower highs at the moment on the lower time frame. So on a 4-hour and a 1-hour. Well, on a 1-hour actually, not on a 4-hour. But if you look on the 4-hour here, we're just holding. We've taken out. Did we take out this low? Low 91.49. No, so we have equal lows right here at 91.49, and we've rejected so far. But once we get a close below this, that would be a break in structure to me on a 4-hour basis. So if you're a day trader or a swing trader, or and you just operate off of the daily time frame, then and the safest trade in terms of a daily perspective, if you wait for this to break, then wait for your retest for confirmation, that would confirm that the sellers are in. But by looking at a lower time frame, you can start to see things in price action that you wouldn't otherwise be able to see on a higher time frame. So we had a high form, and then this low right here, if we break below this, break and close below it. So on a 4-hour basis, I need to see a down candle close below 91.49. All right. If we get that, I think we're going to be bearish all week. All right. And then I would be expecting 91, 99, so 92 big figure to hold as the high. Okay. So if we get that and this doesn't trade higher, then I think it's on for the sellers. Again, further confirmation would be below the daily ICT bullish order block, which is here. But I would take this trade. If we get foreign currency trading into support as we get dollar index broken this level and retesting it, I would go long foreign currency because I think dollar index would want to go lower from here. So there's just too much lining up in terms of price action and technicals that would suggest to me that we should be looking for anything other than bearish price action from what we've seen so far. So, and a lot of people are getting caught up on these lower time frames with what these big moves that we've had. Yeah, we've had a big move so far in the dollar index, and yeah, it may continue. We could be completely wrong on this idea. I just think that it's logical for them to want to take it lower. They've cleared out all the liquidity in here. They've hit this ICT bearish order block, and now I think they're going to want to take it below this consolidation. So that's just me, but that makes the most sense to me. So before we get into the foreign currencies, I do want to talk about one thing in case you guys missed it in the Telegram chat. And it's just to show you guys specifically the things that I'm actually looking for on a higher time frame, so say an hourly basis, and then I'm waiting for the confirmation on a lower time frame by showing me bullish or bearish price action. And then once we get that, that would confirm to me that it's a valid trade idea. So this unfolded last week, and we were talking about it. This candle right here, this down candle, is an ICT bullish order block on a 1 hour time frame, right? So we've traded down, and then once we broke above it here, it became an ICT bullish order block. This candle traded and retested it, so that's a potential trade idea, sure. But I like to wait for confirmation of bullish or bearish price action depending on what I'm looking for. So in this case, I was looking for a buy, so I want to see bullish price action on a lower time frame to confirm that there's buyers in the marketplace at this level that I have marked out. So I got the bullish order block marked out, and you can see price trades right down into it, right? Once it trades into it, I'm not buying it here. I'm not buying it just, you could buy it here and place your stop loss below here. I look for further confirmation to get a tighter stop loss and basically be able to maximize my risk, right? So I'm able to do that by waiting for confirmation. So we've got a low that formed here. Let's drop into a 30-minute time frame because we're now waiting for a lower time frame confirmation. All right, nothing too clear on a 30-minute there, so let's look at a 15. All right, 15-minute time frame. Here you go. And this is usually the one that I like to drop to directly from a 15-minute. Certain pairs have more clearer setups on certain time frames. So like USD JPY I found has better entry opportunities on the 30-minute for me when I'm looking for the retest versus like the 15-minute or something where it's clear on dollar index and cable and euro. But that's just something I've noticed that may be completely not even true at all, but that's just something I've kind of noticed my time trading. All right, so you've got this low. All right, this is too difficult to do, but you got this low that formed here. Then it pushed up, formed a high. Then right here we've got higher low, higher high, right? Or you can consider this the higher high here, but either one of these, you got a higher high here and a higher high here. But you've got bullish price action off of the 1 hour time frame level, right? So I'm waiting for a break in structure before I enter. And if you haven't watched or know what a break in structure is, I have a video I did on YouTube that's literally called Defining a Break in Market Structure. And I talk about it in detail in there as well. But essentially, it's just the market has shifted direction, right? We were making high, low, low, high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Then we shifted direction. Then we started making lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? I'm not entering this market though during this consolidation. And the reason I don't enter during all this is because it's purely consolidating. I wait for the breakout of the consolidation, then the retest of the consolidation. All right, so this blue line is marking out the top of the consolidation. The bottom of the consolidation is this circle. All right, so that's the full consolidation. These candles broke out of it, bam, retested it, and it didn't come close. So my stop loss initially would have been below here. So red is my stop loss. All right. So in terms of pips, I would have entered on the retest of this break in market structure. So you got to be in front of the charts because look, it broke on 15-minute, retested it, and then immediately pushed away. So you could have entered again here, but best opportunity for entry would have been here based off the technicals and price action that we've seen. So your entry, say it would have been 90.80, and your stop loss would have been 90.75. It's a 5-pip stop loss versus what you would have been looking at if you would have entered off the first touch of it here, which, yeah, you would have got below at 90.71. Then you would have had your stop loss at 90.62. Well, it's still only like 10 pips. But still, it could have traded lower in here. I just don't consider this high enough probability. I don't want to sit through the consolidation and wait all this time. Look how quick it happens after it breaks, retests, and then there's no coming back down to that level at all. It continues shooting up. All right, so that's why I want to be waiting for that break in consolidation. So those same things that I wait for on a lower time frame, like in this case, it was an hourly ICT bullish order block. I was waiting for the bullish price action to confirm it. Then once we confirmed it, broke structure and retested, that would have been my entry. So you can use that on any time frame. You can use that on a monthly, a weekly, a daily, and it works. So, keep that in mind because that's huge. Like if you really grasp it and understand like what I'm saying about using this higher time frame level and then waiting for the confirmation of bullish or bearish price action, then you enter based off that, your drawdown will stay minimal. That's how you enter trades. Like there's no other secret to entering trades. That's 100% it. All right, so sorry, excuse my cat. Let's go ahead and move over to foreign currency. I just wanted to show you guys that example. That way you could see specifically what I'm looking for. And these are the things that I'm looking for and mapping out on a higher time frame. I'm mapping out the daily ICT bullish order block, the daily bearish order blocks, all this stuff. And then I'm waiting for the confirmation. So if I'm looking at it on a daily, that's I'm framing the idea on a daily. Then I'm waiting for the setup on, say, a 4-hour or a 1-hour. And then looking for the confirmation, the break of structure on a 15-minute or 30-minute, entering on there, moving back to a 1-hour or 4-hour, and then I'm just simply watching the charts until we get, until my invalidation level is broken, then I'm in the trade. So many people just get caught up on, you look at the 15-minute time frame and you just sit here and you're watching every candle open and close, every candle open and close. Just keep go to a 4-hour, go to a 60-minute, just keep this up, watch a movie, watch a video, study, do something on, if you don't have 2 screens, then journal in your notebook or, on your phone, watch a video, listen to music, whatever you got to do. But you don't have to sit on a 15-minute time frame. It's just going to scare you in and out of trades versus help you find more setups. All right, so let's go through, and the other analysis will be fairly quick. I just wanted to go over dollar index in detail so you guys could kind of have an understanding of what I'm looking for specifically, an example of it. And this is the same thing I'm looking for in any of the pairs, any of the majors. So even if you trade like exotics, Euro GBP, Euro JPY, anything like that, you can still use these things. I just use them in the majors being in the US, but it all works. So I just wanted to give you guys like a good in-depth analysis of the things that I'm looking at and how I do it. All right, so real quick on a monthly in terms of Euro GBP. Again, I don't trade this pair. I use it just like the dollar index, so I use it to determine direction. So if it's trading higher like this, I'm looking for higher prices in Euro. So Euro USD would be a better buying opportunity to me than GBP USD because Euro prices are stronger than GBP prices. And we know that based off looking at Euro GBP. Okay, so that's the only reason that I use this. So getting right into it, we've just been consolidating within this range here. So the market made a low. It's made a lower low. I don't technically consider this a break in structure because nothing's closed below here, but we've pulled back right within this range. So with this consolidation happening, that pretty much means Euro and cable can move freely. And if that means the dollar index is going to be pushing lower, we can see higher prices in both Euro and cable without a problem. So weekly time frame, again, you can see it's just a big consolidation, so nothing really going on here. Once we drop down into a daily, though, we can see that on Friday we've had a massive push up, so that could be a potential break in structure that we have unfolding on a daily time frame, and we could see higher prices on Euro GBP from here if this is in fact a break in structure, because we do have a low which did clear out all the lows of this consolidation. Then we pushed back up, made a high, but we didn't break structure yet. We've traded back down here, made a higher low, and then now we've made that higher high once Friday's close happened, and we have closed above it. So you can see I'm looking for these big, strong, bullish candles like this versus these wicks to confirm breaks in market structure, because you could tell that the buyers are here once you get a big candle like this versus trying to tell if the buyers are here or not by looking at a little wick. So I'm not really concerned too much with Euro GBP at the moment because it's just consolidating and we don't really have a clear move, above this high here or above this low, which would give me more evidence in terms of whether I should take Euro or cable. But I like trading cable primarily better anyways, but either way, I don't really think it matters because we're just in this consolidation right now. Unless we start trending hard to the upside, then I think we'll be looking at Euro USD. So with that being said, let's look at Euro USD. So we did get the levels that I was talking about, 121 big figure that I was calling in the free group, and I think I mentioned it in the paid group as well. But 121 was the level that I was looking for. Let's mark that out. And we did hit that Thursday, and then we traded through it on Friday and have since rejected and traded higher. And the reason that I used 121 is because I was basing it off of this daily ICT bullish order block, which was also the old high right here for this week, which you could tell it's resistance because it traded lower from it. So think about it in terms of, again, like I said, you could use this on any time frame. So we broke above this. That was a break in structure on the weekly. A retest of this could, would be a potential buying opportunity, right? So that's why I had this marked out. It's just a potential support level because it is the market structure break. So when we're looking at this on a daily, you can see it's below these lows here. So we've cleared out the liquidity below there. And now we've traded into this ICT daily bullish order block. It's here. So I think Euro is ready to go. And I think we are going to get higher prices on Euro dollar this week. What would confirm that to me on a daily basis? Well, obviously I already have some confirmation because we have wicked into this ICT bullish order block and have closed bearish since. But if we can break above this candle here, that would be further confirmation that we are going to go higher. So I would just be looking for a break above and a close on the daily, and then a retest And that retest can be on any time frame. It could be on a lower time frame. I just need the close, the daily candle to close above here, and then I'll drop down to about an hourly or 4 hour and look for my entry, and then look to go long based off that. Obviously, as we break this down on a lower time frame, we'll be able to find probably a clearer setup that's down here and potentially use this as the low. But highest probability setup for me would be once we get above this high here, and if we can close above it strong, retest, and then look to go long. So on a 4 hour basis, let's see, don't really have, like there isn't enough price action that's developed yet to signify that we're holding this level. Like technically we broke above this, and this now is a 4 hour ICT bullish order block, but I'd like to see it trade back, into here, form a higher low, then form another higher high. Give me a little bit more price action before getting in this. Yeah, and again, you can see on the 60-minute, we've broken structure, retested it. So we're likely to go higher, but I just want to see a little bit more price action unfold to confirm that they are holding this level and they're not just going to trade back up into this ICT bearish order block and then trade a little bit deeper into the gray box. So I am overall bullish for euro dollar, and that daily candle here is the one that I'm waiting for to confirm confirmation on my longs. So a break of this. All right. So that will be my next level in terms of, what am I saying? If we break above this, that will be a market structure break for me, and then that will be the highest probability long setup. So that's what I'm looking for. Have this candle marked out on your charts, because if we do get above that, then I think we're going to go higher. I actually think we're going to go higher from here, but that would just confirm it. So let's go ahead and look at cable now. All right, cable, we haven't broken this low yet, which would break market structure on a weekly basis. I do still think we're going to go higher with cable. We did leave like these relatively equal highs here, and that's just classic of them to do that. So they'll likely come back and take the price higher and clean that up. The question is, how low are they going to go before they do that, right? So we do have this series of 3 down candles. 3 weeks is what it is. So that's 3 weeks of price action, which is an ICT weekly bullish order block. And this whole area could hold as support. So just keep that in mind. I do still overall think we're going to go higher in cable. I just need to get that breaking structure on a lower time frame, and I'm all over this. So if we look at it on a daily, I think it's going to be very probable that cable will come back down into this down candle. It just has a likelihood to make those deeper tracements before continuing higher or lower. So this down candle right here is an ICT bullish order block. It was confirmed once this candle here broke above it. So now it's confirmed an ICT bullish order block on a daily basis. So if we trade back down into this and we start seeing bullish price action unfold on a lower time frame, then I'll be buying this before it gets to that daily level that we were looking at. And then I'll be compounding more onto the position. So I'll enter, say, 50% of my position here and put the other 50% of my position on once that daily level is cleared out above here. So I'd have one entry down here, say at 1.3580, and then get another entry at 1.3980, and it'd be swing trades to take out these highs at 1.44. So longer term, that's kind of where I'm at for cable. All right, let's drop down to a lower time frame. I mean, we've had a massive sell-off in cable last week, or really the past 2 weeks. So yeah, once we break below that low, it'll be interesting to see what we get. So we could potentially look for a little trade on the retest of this. So that's technically a break in structure. We can get in on the retest here and short it with a target of this ICT bullish order block. So that may be a trade that I take early on in the week before FOMC if we can get that. Yeah, Keith, I'm going to go over UC in just a second, bro. I was just finishing GBP USD, and then we're gonna go to UC. So let's do 60 minutes. And I don't know if you guys all use TradingView or not, but I like to use it mainly for this reason too, because you can get such a broad view on price action. And by doing this, it can really help you see it on a lower time frame too. So, you know, anybody who's confused about you know, what a turtle soup is, you know, this is perfect example. They have a high right here, market trades above it, and then immediately trades lower. And then you're also, you know, able to see structure so good. Like, you know, you could tell this is bullish price action. You got a low, then you got, you know, highs and higher lows forming all through here. Then you got this little consolidation, drops down, takes out the stops, and then pushes higher again, making a turtle soup above here and then breaking lower. So it's just cool to be able to, you know, have this overview using TradingView. You could see, you know, all of this. So it's really good when you're back testing or studying your charts, because you can see, you know, the break-in structures and then the retest. Like here, you got the break-in structure above here, retest, go long. Here, you got the break-in structure, retest, go short, you know. So it's just cool because you could see, I mean, literally everything in terms of price action and what you got. So let's go over UC, and then we'll get to the Q&A, and then we'll wrap this up because I know we've been going on for a while now. All right. So let's look at UC. All right. So overall, we're expecting weaker dollar, right? And we're prepared for dollar to go higher as well. It doesn't necessarily mean that, you know, I just think dollar index is just going to start shitting the bed and go lower right from the get. It could definitely trade higher. I just like to prepare myself for both scenarios, and then I just prefer one or the other, right? So this week, I prefer shorts. I just prefer that based off the price action that we see. It's very possible that we could get the opposite of that. That's why we have the invalidation levels, though, to know what we're looking for and where we're wrong. So you see, in terms of a monthly, it's not really clear in terms of what they're going to do, but we do have this high right here coming in at 31,246. All right. Now, if we break above this, it's likely that we're going to want to go higher. How high will they want to go? Let's see. They could take it all the way up here to 34.30, but if they break above this 31.30 here, then it's probable that they're more than likely going to want to just take this high out and then keep going higher. So keep in mind too that dollar index is just another tool to use for confirmation. And when the markets are moving in sync, then it should be reflected in the pairs. But you could still trade without using that, and then not always will dollar index support your trade. It's just a higher probability when it does. So 34.30, let me put that on here because that is, I would like, if we don't get any resistance at that level there, then you know, we're for sure going higher with UC. But that is going to be my higher time frame levels. So got those. In terms of a weekly, we are within this weekly ICT bearish order block here. So it'll be interesting to see what we get between today and tomorrow. That'll really give us some clarity for what we're going to get throughout the rest of the week, because that's why I like to wait till Tuesday too, right? So we could, Sunday and Monday, we could trade up higher into here, into some lower time frame resistance level, and then start breaking lower. Or market could, you know, just immediately start trading lower Sunday and Monday, and then we look for a entry on Tuesday, and we just wait for a retracement, and then we look for a short on Tuesday. So it just depends on, you know, the price action that we get, but that's why it's always good to wait, because you can get a little bit more clarity. So we are within the weekly bearish order block. So we do have to keep this in mind and watch for potential selling scenarios, because we are within this. All right, so let's go down to a daily now. And then now, see, the thing is, on a daily, we do have, where's my little, here it is. We do have these highs in here, and they just don't like to keep them in here whenever they have equal highs. So I don't know. I don't know if they're going to want to take it above here. I kind of feel that they do. I kind of feel that they are going to take it above here. So that means 129.50 to 1.30 are going to be levels that I am interested in watching. So where's 129.50? All right. So 129.50 is going to be interesting to me, because you could just see them pop their head above here, form a wick, and then trade lower. Now, keep in mind, they could just start trading lower from here, you know, right from the get. But I just feel that they're going to want to take it above these equal highs before going lower. And it's also going to line up with probably a 70.5, yep. Perfect with a 70.5 retracement level. So I just feel like they're trying to get a lot of people short right now, and they're going to shoot it up one more time, clear out all the stops, and then just waste no time in dropping this thing and then push it hard. So I am on the sidelines for UC at the moment, just until I get a little bit more clarity on this thing. I would be short on a break and retest of this, honestly. I just don't like that these are these equal highs, because it's like a triple top, right? There's so much liquidity and so much money above here, and then it's formed another double top here. It would just make so much sense for them to want to come back up here into this, you know, say it's this 4-hour ICT bearish order block, which is right around that 1.30 level I was just talking about. Yeah, 1.3015. And yeah, like if they push it up here, they take out everybody who's already shorted this. Anybody who's been short since here, anybody who's shorted here, they push it up, clear all those people out, and then they just drop it mega hard. They don't wait. They don't wait and just start dropping it hard. So we're going to be watching this, because if we can get a push up into this level, I will be shorting this all day if we get this move. If we get this move, this is my favorite setup, 100%. So that's what I will be watching for USD CAD. Let's look on a 60-minute and see if there's anything a little bit clearer. Yeah, so I need to see a break below this ICT bullish order block here on an hourly basis. So if I can get a break below this, that will confirm to me that it's likely that the sellers have stepped in, but still, if we haven't cleared out those highs or anything, I'm going to be waiting. And if I enter this, it's going to be a really small position just because we have all those equal highs. So this could be a scenario that we get drop down, break structure, retest, and then look for the short. Again, my favorite one though will be if we can push up above all those highs and then start to sell off. I think that'll be a good setup. Okay, so that pretty much wraps up the weekly technicals or my market outlook video of what I'm looking for the week. So do you guys have any questions about anything? UJ, yeah. Give me 1 second, guys. I'm gonna grab some water real quick. All right, guys, I'm back. So UJ. All right, so UJ on a monthly, they had this ICT bullish order block right here. The high was at 104.32. So we didn't really touch that yet. Okay. Overall, from a monthly standpoint, we are bearish. So we do have the high, and then we do have the break in structure that was here. We broke below this low. It was a bunch of wicks, but we did technically break structure, push back up into this ICT bearish order block here, from this low to this high, and then found resistance, push back up into this ICT bearish order block, which was formed on the break of this candle, and then have since traded lower. So if we map out these two up candles, this would be an ICT bearish order block on a monthly basis because we did get the break below right here. So let's go into a lower time frame and see what we get. And as of right now, we're actually trading within this weekly ICT bearish order block. So we can refine this a bit. And this could hold as resistance, right? Or we could break above this and then we could continue higher. Same thing with USD CAD. We do have a lot of highs up in here, right? We got a high, 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 high. Well, technically the liquidity above these was cleared on this break. So we just have really this high here and this high, these equal highs, and this high that we have resting liquidity above the market. Now, UJ though can keep equal highs in for a while. Like I've noticed UJ, where is it? Oh, it's right here. These equal highs, like you could see, have been here since December. Like, and they didn't feel the need to run it back above those. So it could easily keep equal highs in the market for UJ. Like that's not really a big concern for me. But sometimes UJ could move like its own way without, dollar index at all. So you really kind of have to study and like understand like the behavior of this pair on its own, kind of like without the dollar index as well. And I don't think I've studied UJ, but I haven't like really studied UJ to where like I know a lot about it. But I'd say I know a good bit, but I don't know nearly everything there is to know about like the specifics like, UJ has like and does in the charts or anything like that. But in terms of a daily, I mean, last week we just been pushing up all week. I'm just waiting to see if we can get a breakdown. So I'm gonna have to go on a lower time frame to see the breakdown. But I mean, we are at key resistance. So if we get a breakdown on a lower time frame, I think it should be a solid short. First target, would be really this ICT bullish order block on a daily coming in at 107.60. That'd be my first target. And then honestly, I'd be looking for each low to be taken out. Just look for each swing low to be swept. Possibly even making new lows below 104.50. So let's drop down and see where the breaking structure would be. Okay, so yeah, we got this ICT bullish order block on a 4-hour basis. If we can break below that, that would indicate a breaking structure to me. And then I would be looking to short it. So this low comes in at 108.71 on this platform. So I'll be looking for a push and then a retest. And then that would confirm to me that the sellers are in, and then look for continued shorts, targeting 107.50 as my first objective. Or I think it was 107.60. Yeah, 107.60. So that's a pretty nice objective. It's about 100 pips. And then my stop loss would be, on a lower time frame, obviously, based off of like a bearish order block or something that we get formed around this level here. And that's pretty much how I'd play UJ. So overall, I'm looking for shorts unless we can, if we make a new high, then we'll probably have to switch our bias and start looking for longs. But as of now, if we break this, I'm looking for shorts.